Good morning everyone, this is Alex, Senior Account Executive at GDMFX with your European session outlook, and we'll start with the North American markets where we had news in Canada on Friday. The CPI month-on-month and year-on-year were 0.1% worse than expected at negative 0.2% and as expected at 1.3%. The CPI core month-on-month 0.4% less than previous at negative 0.2%. Retail sales month-on-month 0.6% worse than expected at negative 0.6%, and retail sales ex autos month-on-month 1.1% worse than expected at negative 0.8%. The USD traded broadly higher against its major counterparts last week. The dollar will mainly be driven by the Jackson Hole Symposium this week, as well as the speech by Janet Yellen during the week's end. The markets aren't expecting too much of a surprise from her, as she cannot say much more than what has already been said from the Fed presidents last week. She would need to outright say that we can expect a hike in September for us to see any major movements. The Dow Jones ended basically sideways, same as the Nasdaq on Friday. The Dixie is up to 94.93 from 94.34. The USD CAD 90 pips up Friday, USD Swiss franc 45 pips up. The USD JPY ended sideways. The main event that we'll be looking for today in particular is the Chicago Fed National Activity Index. Alright, on to the European markets. On Friday we had the PPI, Producer Price Index, month-on-month and year-on-year, both coming out 0.1% better than expected at 0.2% and negative 2% from Germany. A fairly sparse economic calendar this week promises little in the way of foreseeable volatility, but the recent euro rally makes it clear we can't rule out sharp currency swings. It would take a major surprise out of the coming weeks' European market PMI industry surveys or German IFO business confidence figures to elicit big reactions out of the Euro USD. Traders will need to look across the ocean for a more likely market mover in the US Fed's Jackson Hole Policy Symposium, which starts on August 26th. Onto the UK markets. We had on Friday public sector net borrowing come out negative 1.472 billion British pounds. The sterling dropped the most in 2 weeks after a statement by Prime Minister Theresa May that she is considering triggering Article 50 in the first part of 2017. Sterling declined 0.8% versus the dollar and 0.6% versus the euro after a week of good economic data and upward movement of the UK's currency. The FTSE 100 was 19 points down, closed at 68.59 on Friday. The GBP JPY 150 pips up on Friday, 225 pips range. GBP Australian dollar 125 pips up on Friday, 265 pips range. And GBP New Zealand dollar 115 pips down on Friday, 210 pips range. Those are the biggest movers. And for this week, mainly we'll just be looking for the GDP quarter-on-quarter and year-on-year from the UK. Onto the Asian and Pacific markets. Asian shares were largely mixed Monday, with traders expecting hawkish commentary from US Federal Reserve officials this week at its annual conference in Jackson Hole, Wyoming. In Japan, the All Industry Activity Index came out 0.1% better than expected at 1% early in today's morning. And this week from the Pacific, on Wednesday, we'll have New Zealand dollar exports, imports, and trade balance data. Last sector for the day is commodities. The Baker Hughes oil rig count came out 10 more than the previous at 406. And from Iraq, Iraq's OPEC's second biggest producer will increase crude exports by about 5% in the next few days after an agreement to resume shipments from 3 oil fields in Kirkuk. Shipments will increase by about 150,000 barrels per day. Crude oil was up 80 cents on Friday. Gold prices were relatively flat last week, with the precious metal up just 0.57% to trade at 1,343. ahead of the New York close on Friday. Again, the Jackson Hole Symposium will likely have the biggest effect on this commodity as well. So that was all for today. Thanks for the attention, and I'll see you next time. Goodbye.